We are at the East Africa breweries. Some good numbers. 38% profit after tax. Very impressive. I want to have a chat with Jane Karuku, the Group MD, just to understand what has been happening. What are the good numbers? Any news for shareholders and much more. Welcome to the Trading Bell. Jane, welcome to the show.
Thank you very much.
Congratulations first on those numbers. In fact, I decided to become poetic looking at those numbers and the results. If there was a headline to be put in place, would you call it a recovery, resilience, or repositioning for future growth?
Wow, do I have to answer any of those?
No. You can choose your own.
Okay. And by the way, welcome to the Tusker Brew House. I hope you like it. Looks quite nice.
Looks perfectly well.
Yeah. So I think it's a combination of everything. I don't think I'd use your words to describe. I think what I would say is it's just that it's a business that has been on a successful journey.
Yeah.
And that momentum is continuing. So I would say is a sustained momentum space.
Okay. Yeah. I love that. Very much sustained. Fair enough on that, but maybe you could just shed some light a little bit more, because I heard you speak from your volumes going up by 8%, net sales as well, grew as well. Very good numbers there. What would you credit to generally this growth before we get a few of the specifics? Yeah.
So I think it's our P&L this half would be what any business leader would like to see in their business, where you have great gearing from a volume growth. And for us, it means liquid to lips. And then it translates to great NSV, which means your pricing decision, your consumer segmentation is working well. And to profit even growing even faster than the NSV line, which means that you're in between, you're taking care of your costs, you're being cost efficient, and you're making the right calls from an investment perspective, especially for the brands.
Okay.
And I think what then has helped us, I think, and I said earlier, is I think our portfolio is working in accessing the new consumer opportunities that we are seeing. And I talked about, if you look at our portfolio, beer grew, spirits grew. And our innovations did very, very well, which means we are understanding the consumer a lot more.
Okay.
And if you remember, I said from our priorities as a business, being consumer-centric is the number one. Because only then, if we understand our consumer, what they're consuming, where they're consuming, and how they'd love to do it, then we are able to access those consumer opportunities. So I think that's number one, a great portfolio of brands. And I think the next one would be our competitive edge in terms of route to market. So do the consumers find us when they need to? And I think they do. We are very strong. We have a very strong route to market. And then the last one would be, we have a great set of people. We have a great talent pool within the business that are energetic and passionate about what they do. And therefore they're able to deliver against all these financial, brand, and route to market objectives. Just
comparing last year's and this year's and what you have done, I feel like you sit at a very good vantage point to tell a lot about consumer behavior, because probably your products can easily tell when they are taking much and when they are restraining themselves. What have you checked out when you look at consumer behavior and demand across the key markets? What have you observed?
So one of the biggest consumer drivers within the country is, we call it connect, or motivations. So our consumers like to go somewhere and connect with each other. So then when we think about our brands and where we need to be, we look at what are those connect moments and those connect occasions. And then we superlay that with the right brand, with the right occasion, and with the right razzmatazz in terms of are we giving your brands with bells and whistles. I think the other one would be, we are seeing a lot of exploration, which means consumers want to explore different things. So flavor is exploding. And if you look at our innovations in the recent times, it's about flavor, lemon, ginger, spicy. It's a whole host of consumer dynamism that is happening that's actually is across categories. I think if you go to a supermarket, you'll observe these, not just in our segment.
Still on the same breadth of consumer behavior, I wanted to understand how you're balancing affordability vis-a-vis the fact that we can also see that there is a lot of premium categories that are also coming up and the likes. How are you balancing that to ensure that your customers are still in touch?
So I think if you look at our business, we have a great portfolio that accesses the myriad levels of consumer segmentation. So we have premium. There are people like you, I suspect, who have no stops, who want to really enjoy yourself and buy something nice for yourself and reward yourself. We then have the middle, who probably want something to enjoy, but not very expensive. And then we have the low end. And I think we have brands from Johnny Walker Blue
all the way
to even a Tusker in the middle, or a Smirnoff, or a Chrome at the bottom, or Senator. So we try and offer all consumer segments a great value brand of their choice, which they can enjoy, which is safe, and the language of communication or advertising talks to them particularly. So and I think that's why I keep saying we have a great portfolio because we understand how to access that opportunity.
Let's just now move from the regional perspective, from the markets that you oversee. And I was looking at the numbers and seeing they will never be uniform, definitely. But I just wanted you to paint a picture for us, what you're observing in the Tanzania market, Uganda, Kenya. What have been the general observations?
First of all, I would say consumers are the same in East Africa. We can pretend we are different, but we are very, very, very similar. We like connecting with each other. We like flavor. We like family. We like socializing.
Absolutely.
So we are the same. We go for value for money. We are value hunting. It is the same. So the consumer is very, very, very similar. And therefore, for us as a business is to look at what trends are we seeing across that ecosystem that we can exploit together. The execution could be a bit different. So the execution of a flavor in Uganda could be, you've done it with Waraji. But the same one, you could do it with Tanzania with a TZ. Or in Kenya with a Kenya King, but the consumer is the same. So I don't think there are any regional differences. Sometimes I say it's managers who are different, but not consumers.
Let's dig deeper now to those particular markets. And I wanted you to paint a picture based on in terms of numbers of growths, going to the numbers that you have recorded. And I had a feeling Tanzania looks like it's on a very serious upward scale. What are your observations when it comes to numbers?
So remember, over time, Kenya was the biggest, and a very big proportion, plus 70. And our agenda over the last 6-7 years was to how do we de-risk Kenya by making sure Tanzania and Uganda grow faster. So if you're an EABL shareholder or stakeholder, you're kind of de-risked. So, and I think we are succeeding in that. So I think today you can see Kenya is about 60%. Which means that our growth in Uganda, which has accelerated over time, is bearing fruits. Tanzania is sort of the one we've started recovering in the last 2 halves. And because it's a small base, obviously the number looks quite accelerated. But I hope it continues like that in the 30s. So I think the strategy of the business to keep growing faster in those markets, because we have more to go for, is working. Let's
talk on what probably would have been the start of things, but when you presented about the macro environments and everything else, a lot of stability across the board, and we have seen that even across businesses as well, from currencies to everything else and all that. But I always say a CEO always sits down and has this one thing they have to scratch their head on. I don't know whether it's on a monthly basis or weekly or something, but you must be observing something, probably on a regional perspective. What's the one thing that you have been closely monitoring so that it doesn't affect your bottom lines?
I think the one that is really worrying me now is illicit. So we just finished a study about 3 months ago across Tanzania, Uganda, and Kenya. And it is just shocking at the rate at which illicit is growing. A few years ago, we were on the 50-50. Or even 40-60, where 40 was the illicit and 60 was the formal. Now that has switched.
It has switched now. 60%.
60% is illicit. So we are accessing only 40% of the ecosystem. Which for me is a worry. Our consumers are not getting safe brands or safe alcohol. So that's a health issue.
True that.
The other one is that if you think as a government, and I mean, you saw we get awarded for tax paying each year, is that government is not getting what it deserves. from a revenue perspective. And then lastly is it's not sustainable, it's not tenable. Because if you're illicit, you're not doing things in the market that get the whole integrated sort of value chains in the ecosystem to grow the economy, not just in your category, but for example, farmers, the trade, distributors, or even trucks to deliver this stuff. So I think that is probably the number one. And unfortunately, illicit hits the top line.
Absolutely, I can see that.
So imagine if, let's say, our resource today, what you've seen was accessing even 10% more, 50, 60.
Different.
It would have been very, very different.
Right.
So that worries me because it looks like it's going, it's not going in the right direction.
Let's go to the policy levels a little bit. One of the things that we see is that taxes and regulation continue to shape your sector big time. I don't know what are the latest, because it looks like our taxman will always have new things coming up. It has been sentiments across many other businesses as well. So at what point do taxes become a constraint to growth rather than a source of public revenue, in your own opinion, speaking to that environment? I
think we continuously have conversations with authorities in terms of tax policy. And I think 2 years ago we made some great strides because we've held beer prices, and you can see the results. It's starting to go back. And the beauty about beer growing is because beer is so integrated in the ecosystem. If you think of barley farmer, a sorghum farmer, trucks, the retail trade, we have 250,000 outlets across East Africa. So when beer is kicking, there's a lot of employment. I mean, it's an economic activity. So I think on that part, to be honest, like in Kenya, there was some great move about 2 years ago, and I'm hoping it sustains because the results, the theory is proving to be correct in terms of elasticity. We understand the elasticity of our brands. And we know excise tax is the biggest driver of price. So once you can deal with excise, then there's stability of pricing. And then when every other macro is stable, then your volume starts growing. And then everybody is happy. Everybody gets happy. And we find Tanzania and Uganda, they're quite stable in that aspect.
From a strategy point of view, as we come to a close of the conversation, which strategic decision have you made in this half that we have seen these good results coming up? Which one have you made in that particular half that gave you the most confidence, maybe if I may say that, and which one remains still work in progress?
I think I would say the biggest strategic decision is to stay on strategy.
I like
because
that.
you go up and down. But the biggest strategic decision is stay on strategy and execute it. There is no other magic about it. Because if you don't flip-flop, if you're on strategy, it may not deliver day one, but eventually it will. And even when you get shots, and you have your right on strategy, it becomes your true north. You have a better chance of survival. So I think it would be those two. So strategy is good. Execution can be a bit dynamic. So you have to be agile as you execute on the strategy to keep moving. And I guess that's what I would say. There's some bits I'd like us to execute better as we go on, but that's life.
This conversation can never end, and definitely, and I mentioned it when you were having a conversation with the entire team there. You have been on the news, and we have seen this up, but shareholders definitely crucify me if I don't ask you the question. Is there any reason to worry? Is this just normal transaction? Is it affecting any of your operations? Or are we still stable?
No, I knew you would ask that. So I think, December 17th, we saw the announcement that Asahi and Diageo had come to a deal to buy the business of the 65% which Diageo held. And I think what I want to say upfront, Diageo is a great company. Asahi is a great company. So we are lucky. What I'd call our grandfathers are both very credible global organizations. From a consumer perspective or a customer perspective, nothing changes with this deal. Because we'll continue distributing. We have licenses to continue operating with Diageo business, Diageo brands. So if you used to enjoy a Johnny Walker or a Guinness, that will continue. The same way you continue enjoying a Serengeti, a Bell, or a Tusker. That does not change. The entity is EABL. So even if you had a contract, it was with EABL, that doesn't change. If you own the share,
yeah,
it's an EABL share, so that does not change.
Yeah.
We are going through the transition, but the biggest, I guess, the biggest work stream is on regulatory.
Okay.
And once that regulatory approvals are done, we'll come back to the market to tell them what it means. But from where we stand, nothing will change. The name remains. Asahi is a great partner, and EABL will remain for the next 100 years.
All right.
Yeah.
So we must as well speak to the shareholders. Definitely when good numbers like this come up, they truly hope that they might get something. Is there something that you've cooked for them?
The dividend was great.
Oh, good.
Oh, you forgot the dividend. There is a 4 shillings interim dividend, which I think is a significant jump from the last half.
Absolutely.
Yeah.
There you have it for you shareholders. And maybe just the last question now, looking ahead at the second half, Jane, maybe what are your predictions? What are you looking at? What must go right for you to say EABL has delivered a successful full year performance?
Again, I repeat,
yes,
we stick to strategy.
Yeah.
We know what we want to achieve this year.
Yeah.
We know our strategic pillars. Beer must deliver.
Yeah.
We must continue premiumizing. We recruit with mainstream spirits. And we have to keep shaping the new frontiers as a consumer changes or answering to the dynamic consumer. And then just execute towards that with everything else. Like, are we delivering for them where they want to consume? And are we exciting our people? So that we can deliver just strategy and then execute. That's what we want to do in the next half.
Okay. And definitely the big numbers shall be announced, right?
Yes, inshallah.
Thank you so much, Jane.
Yeah, thank you very much.
There you have it. That is Jane Karuku, very optimistic about even the next half, and really congratulations to them on the big numbers that they have. And of course, congratulations as well to the shareholders. Good tidings there. 4 shillings on your share capital as well. And thank you so much for really supporting such a great brand that has really moved across the region as well. Once again, I leave you now with the markets. See you next time.